Okay, it's Thursday, April 14th. We've got some really interesting sets of economic data that were released throughout the last few hours. Had a pretty big impact on the markets here. Doing coaching session right now and pause to take a break here. It's just a few minutes before 10 a.m. New York time. So I'm going to review these setups here. Again, sharing this with other coaching students to give them a better perspective of how we're walking through our setups for the day and what we're looking at. This is a 5-minute chart on the euro dollar, and you can see where I start up here during the London session. It gets a bit choppy in here, just kind of bouncing around, no real clear direction, nothing really setting up significantly at any particular time until this bar right here. And that's what sort of sets everything in place here. Again, just kind of scanning through the charts. Let me pull this one into view. This is a tool that we use. So this isn't necessary, but it is a tool that we do use. It is a Equibar. If I was to highlight this and then expand this particular chart, for example, this is the pound, you're going to see that not only am I getting really interesting bars that draw my attention to these possible turning points, but I'm also getting volume histogram bars that are also unusually large here at this point. And this is at the London Open. So I'm watching all of this and I can see more of these bars expanding with the movements to the downside as opposed to the ones that keep running into resistance and then don't go anywhere. Now, this does not replace the wave counting exercise that we do. Let me go to that chart. You need to do your wave counting along the way, but this is a visual tool. It's just a scanning method so that when you're scanning and looking at your charts, you want to identify things that are standing out and bringing it to your attention. So let's say the pound dollar might have some movement. Today we're getting movement, sort of across the board. A few currency pairs aren't really reacting to it as dramatically, but today we're getting the euro dollar, the pound dollar that are moving like this. Other days it just might be the pound dollar that would fire off something like this and it would grab your attention. That's the primary reason for me using this particular tool. This is not the basis for my entry. Again, it's just another method for me to scan through the chart. Now, what you're looking at right now, this is what we do on a consistent, regular basis throughout the trading session. We're going between, let's say, a 30-minute chart. We're also switching to a 5-minute chart. We're counting the waves, trying to identify this area of weakness right here to see if it's actually going to break out and continue to go higher, or is it going to reverse? And there's our 30-minute bar as well. You can see it on the 5-minute chart. It was pretty dramatic. This is a pound. I'm going to go back to the MetaTrader. So again, we're looking for multiple forms of confirmation throughout this process. This is the dollar index. I made a video on this yesterday, so watch yesterday's video. That was April 13th. So again, on the 14th, we're getting sort of the same thing. I mean, this is actually a more accelerated move than yesterday's move to the downside here. So this confirmed our trade yesterday. Here's our confirmed opportunity here with the dollar as confirmation to the upside. You can see just how strong and dramatic it is. This is the 30-minute chart. We're going to go between the 30-minute, the 1 hour, the 5-minute to confirm to see where these candles, ease of movement to the upside. We're noticing that these bars are all closing at the highs, so we can continue to hold on to this trade. And now we're taking a look at our euro dollar trade, 5-minute time frame. The entry here is at 1.0862. Here's the first psychological level. Well, we knew if it was going to start accelerating, as I showed you with all of the volume, Equibars, all of that, kind of drawing to our attention, the fact that this was going to be a relatively big move, along with the dollar reversal down there moving to the upside. This is just an obvious price target. I mean, I set these up all the time as soon as I get into a trade. Again, you do not need to use point and figure to calculate this, but you certainly can use point and figure to determine where it's likely to stop. Here's our final target here at 80. Now, the next target would have been 50, and that goes as low as 56 and stops. So we're looking at the 5-minute bars now to look for a possible change in character, right? We're noticing that all of these bars, for the most part, are closing pretty consistently towards the lows, or maybe on these little pullbacks in the middle, but then, there's no reason to stop out of this trade just yet. And then the next bar, dramatically moves along the way. We're switching between the 5 minutes, so this was also going to look like this on the 30-minute. So we've got one bar once it finally breaks through after this pullback. Here's that weekly support low. Remember this. I talked about this yesterday, and I talked about how you got to do more work. You don't want to be lazy about just looking at the charts. You want to find significant support and resistance levels that may not be obvious to you on a 30-minute time frame. You go to a weekly time frame, you're going to be able to see this, and I talked about it yesterday, so go back to yesterday's video. It's on the YouTube channel, and you can see how this was actually creating a little bit of confusion in here. And then this pullback, not confusion, but in the sense that if it was going to drop, we were going to have to clearly move through it, and then watching this pullback, stopping right there at that resistance level, old support, didn't surprise me at all. And then it resumed, and when it resumed back down to the downside, I got into the trade as it took out the low of this reversal bar. This was apparent on the 5-minute. It was also obvious right now, what you're looking at is a 30-minute chart. The entry here, again, 1.0862. Notice where all of these bars are closing. Now we're getting the reversal on the 5-minute. It's becoming obvious, telling us, hey, we need to consider locking in profits and possibly even just closing out the trade at this point. This has been going on for, again, 30-minute bars. We've got 1, 2, 3, 4 approximately. So for the last 2.5 hours, almost 3 hours, this has been in effect, where we've watched this whole breakdown here and a move back down to the opposite direction. This was our spring and our setup from a couple of days ago where we traded this to the upside. So remember that. We're taking out all of these key levels. Let's go back over to the daily time frame. So again, while it looked like a bounce off of that support, now the whole thing's it's unwinding. A test, again, of this resistance level here. We're looking for these ultra-high range bars, sort of solidifying our support and resistance lines. Here's another ultra high range bar right here. You can see where I had some resistance in here. Now we're kind of reversing this whole thing. Let's go to the larger time frame, weekly, tighten it up. So here was that level that I was talking about, how it just kept creating support and resistance levels going all the way back to the early 2000s. I can continue to go all the way back. Let's look at the monthly. Open this up a bit, and you can see where we're getting this pocket of support, old resistance, and how it reacts here even on a monthly time frame. We're breaking down that level at this point today with today's trading action. We're actually taking that out all over again. So let's go ahead and open it up and see what it's going to look like now. I tighten this up just so that you can see if we were to expect price, if is there the possibility? Are we at a monthly low now? Well, not yet. We've got this low over here that goes all the way back to 2000, and that was October, and it's down there at 0.8180 area, right around that range. We've got a long ways to go. I mean, this has got plenty of room to move in either direction. So I bring this to your attention because this is one of the things that we're always thinking about, which is where is if we're looking at a 5-minute chart, where's the 1 hour support and resistance? Where is yesterday's high and low? Where's the weekly high and low? Are we approaching those levels? Is it likely to create a reaction? Are we going to break through them? Let's go back to our trade here. So again, we're kind of sitting here with a 5-minute chart trying to gauge whether or not we can hold this to the next target of 50 or if we should lock in and close out the trade here at 80. So the entry, again, 80 psychological level, I'm sorry. For those of you who are watching this for the first time, I look for psychological levels along the way. So 50, 20, the 00, the 80, the 50, and it just keeps repeating all the way down. It looks like it's going to stall here. It may bounce and pull back down one more time and then kind of go back the opposite direction, or it just may jump up one more time. At that point, we're just going to lock it out here at 80, and then we're done with the trade. One of the ways that you can do this, with one lot, you don't really need to worry about it because this move was so dramatic and so fast that you could have held on to it. The 30-minute chart was one of the indicators and one of the time frames that I used to get into the trade. And you'll notice again where all of these bars are closing relatively at the lows on this move to the downside, which was relatively safe to hold on to the trade. Going at a 1 hour chart, you see it kind of happening here. I mean, pretty obvious. So you want to toggle through between these different time frames to help you gauge how long you could hold on to these trades. Psychological levels, use them. Sometimes you're not going to get the opportunity to use a Fibonacci tool and look for extension targets. And very often, if you look for extension targets, they're going to hold up really high. I used to use them myself. I used to use the Fibonacci tool to try to gauge my targets back in 2000. And then I realized I was leaving a lot of money on the table. And the only way to counteract that and to be able to hang on to these trades is to learn how to read the charts. You want to learn how to read the bars and the data, the information that it's giving you. By doing that, you can determine what's likely to happen on the next bar. So along the way, again, 30-minute time frame, that's my preferred time if I'm going to day trade. You can see exactly what we're doing here. Let's go to the I'll give you a total here in just a moment, closing out here at 80. This was basically the same setup here on the pound dollar 30-minute time frame, area of distribution. Finally breaks down that low. Not really much of a pullback here. I was looking for it, but didn't really get it. I kept going back and forth between the 5-minute bar chart, and I didn't get it. I didn't really get a pullback except for this little area right here, this little pullback and this little pocket. And then that was my reversal in the direction of the breakout to the downside on the 5-minute right here where I'm moving my cursor. And then I got in here at 1.3093. First target was 50. Let me tighten this up and go to the 30-minute chart. And you can see 50 is my target, but we're looking at these bars, all of them closing almost at the lows. Like this is pretty dramatic here. This little pullback right here is kind of weird, just going right there to the 50, which is the target. If it was going to reverse and go any higher, that would be my final target, but I'm going to hold on to this trade to see if it makes another rush down towards this psychological level of 20. If it stalls there between 50 and the 20, again, I'm going to be going back to the 5-minute chart to see if there's anything that shows a change in character or if this thing's going to stop and not go any lower at that point. So I'm going to keep a close eye on it and to try to squeeze out as much as I can, but looking at the information that the charts are giving me, right? We want to read these bars to see where we should get out of this trade. Let's take a look at another trade. This is the dollar Swiss. I am looking at Swiss futures, Thinkorswim platform. Again, counting the waves, looking at the volume. This was an entry here when it finally broke out this top. 0.9387. First target 00. Second target the 20 psychological level. Next target would be the 50. This one does move a little bit slower than some of the others, so that might be the end of this one. I'll just have to continue to manage this one to see what I'm going to do with it. So let's take another quick look here at the dollar Swiss. So far between these three trades that I've shown you, the euro dollar here, 81 pips, pound dollar at about 54 pips so far, and the dollar Swiss here, 33 pips. So 168 pips so far at this point. If these things jump up one more time, or let's say the pound dollar makes another move towards that psychological level of 20 down here, which would be the next target, or somewhere in between, I would add that to the 168. But it's 168 pips. Now, I'm not double counting. I know that a lot of other services do that. They'll talk about their trades, and let's say they'll take 10 pips from, let's say, from this high to that low. They'll take a 10 pip trade, but they have 10 lots on the trade, and then they'll mark it up on their performance statements as a 100 pip profit trade. And technically, I guess you could say that they've earned that, but I think that's super misleading. I hated seeing that when I went to websites and I was considering using some of their services or to learn from them myself. I went through that back in 2000 when I would go to websites. People were doing it back then. So it's very misleading. It's very misguided. What you want to know is you want to know the profitability in the trading system to see if you're willing to use it. If it's a trade copy or service, you want to know what the profitability is. You're probably not going to use 10 lots. And if you're a trader wanting or considering learning the trading system from this educator, and they're doing that, they're taking 10 pips on every trade, but they're using 10 lots, you probably won't be using 10 lots. Everybody starts off with approximately one lot. So whenever I report my performance, it's always from the entry to the final target. I don't double count. It doesn't matter how many lots I have. I'm going to give you the straight facts, which are from the breakdown to where it on the chart, from the entry to that target. That's the reporting that I give you. I've always done it that way. And like I said, when I experienced that when I first started trading, I couldn't stand it. So when it was my turn to report my stats, I swore I wasn't going to do that because it's just so misleading. You can't get the true force of what's behind the trading system and how much profitability it actually generates when you do that, when people do that. It's very difficult to gauge whether or not you want to waste your money on the system or the trade copy or the signal service, whatever it is that you're considering. So again, this is from the entry to the final target. Just based on one lot, that's it. And when I talk about scaling out, well, you're still getting from the entry to the final target wherever we close out the trade. Your ability to be able to learn how to do this. Some people will look at this and they'll say, okay, well, it's easy for you. You've been doing it for 22 years. Can I learn how to do this? This is just accumulation distribution. That's what we're primarily focused in on any time frame, whether it's a 5-minute chart or a 30-minute chart. And you see me do it over and over and over again with all of these videos. It's always the same basic setup. We're looking for accumulation distribution. We're trying to track the footprint of the smart money and the setup or the reaction of news that's also the setup. We're using wave counting exercises. So the only indicator that we really use is the volume indicator. Sometimes you hear me talk about the point and figure. I do use point and figure so that I can calculate where my take profits are. I use my point and figure for the daily, weekly, and monthly time frame so I can get a big picture overall view of where price is expected to go. I do also use the point and figure for day trading, so I can use it and set up my point and figure to mimic the 30-minute and the 1 hour time frame. But it's not necessary. It's not necessary for you to learn how to use point and figure right away. Most of my coaching clients, when they learn this system, were primarily focused in on bar reading exercises, where we can take a chart just like this, and I'm going to, basically say to you, or you can do it yourself. You're just basically saying, with the data that you see here, can you determine what's going to happen to the right of this chart? And you certainly can. And one of the greatest traders, Richard Wyckoff, had always said, and I'm just paraphrasing, that you can determine the direction of the market based on its current and previous behavior. And you got to learn how to read these charts and read these bars accurately. I've got exercises in my coaching course that teach you how to do this. We use worksheets. We study this over and over and over again. This is part of the practice that we do every single day. It's kind of like, a basketball player, before the game shooting free throw shots. There's certain drills that you're always going to execute and you're always going to practice every single day to be good at your game, to be top at your performance. Same thing here. We're studying, and it doesn't matter what it is, whether it's a stock, currency, commodity, and you're going to just go through these charts and analyze the bars, and you're going to learn how to read the bars so that you can determine what's going to happen next. And you can get that skill. It's a skill. It's sort of a lost skill. Far few traders are learning or taking the time to learn this and to develop this ability. It's a very, and you can hear me kind of getting worked up about it, because whenever I get this conversation, people will say, can you tell me what I could do to get really good at trading? Like, I want to get really good at trading. What indicator do you use? And I tell them, well, don't use any indicator. Just learn to read a bar chart without any indicators. You can see here, I'm primarily trading most of the time without any indicators here. The only indicator that I switch to is the volume. You saw me use the equivolume bars, but that's just like I said, when I'm scanning through, and I just want something that pops out as I'm looking through 15, 16 different charts on different time frames. What's starting to move? What's starting to build a little pressure is the way I would explain it. Something that's starting to move either to the upside or to the downside. That's it. It's not the basis. That tool, the equivolume bars and the volume, it's not the basis for my entry. The work that we do, identifying accumulation and distribution and reading these bars independently or collectively, is our ability to find these turning points where we can then determine that we're getting complete reversals here. And you got to learn how to read the charts. That's what you want to spend all of your time doing. Practice doing that. It's like modern day tape reading. It's totally true that this is like modern day tape reading. Obviously, we're not sitting here, reading the numbers off of a ticker tape, but this is as close as it gets to that. And you're going to be able to read the charts like this, where you can hang on to the trades, not only get into the trade, but you're going to be able to hold on to the trade. You hear me say that the point and figure is something that I use so that I can get the bigger pieces of the move. Well, you can do the same thing just by simply learning how to read these bars along the way. And you're going to go back and forth between the 5-minute and the 15-minute, or maybe the 5-minute and the 30-minute chart. And you'll be able to hold on to these trades and get the bigger piece, the 2/3, the meat, the middle of these trades, the trending moves that take place. They don't happen every day. It's just so happened that it took off to the upside yesterday, and now we're watching a total reversal today. Tomorrow, it may not be like that. Tomorrow may be a pretty flat, quiet day. But on days like this, when you're going to earn the bulk of your profits, you've got to be able to recognize it and to be able to trade it and hold on to these trades for as much as you can possibly get from these trades. Your ability to learn how to read these bar charts is what's going to keep you in the trades and earn more of that trending move. I hope you did well. Again, at least 168 pips. We'll probably close the day with a lot more than that. I hope you did well.